Okay, hi everyone. First of all, I would like to give Assalamualaikum and good evening to all of my viewers. For your information, this is my first experience creating YouTube video for the assignment task and for this subject, which is Introduction to Financial and Costing System. This is my first assignment task, which where I need to record my where I need to record after the assignment and post to the YouTube channel. Okay, so for the first assignment and the first chapter of the subject, it is Introduction to Financial Accounting and Cost Accounting. Oh, before I forget, I would like to introduce myself. I am Norain Dalilah Binti Nordih. My ID student number is 00610415. So I am foundation student of the last sem in my university. Now we're gonna move to my slides. There are 3 questions, and in each of the questions have subtopic questions. So for the first question 1. There is 3 subtopics in this question. First, define the financial accounting. Second, define the cost accounting. And the last one is give 4 differences between financial accounting and cost accounting. Okay, first question, financial accounting. We're gonna look how it's work, and what is financial accounting, or for short, I will call financial accounting as FA. Okay, what is FA actually? And for sure, I don't know whether you are a new student or you see my videos as refreshing your topic that you are learning in your class. So what is FA? It is a process of recording, summarizing, and reporting the myriad of transactions. And then they summarize the financial statements, balance sheet, income statement, and the cash flow statement. And have you ever think how the FA work? Okay, so how FA work? It works as follows, either the accrual basis or the cash basis. And the non-profit corporations or small business use financial accountants in their company. And then financial accounting reporting occurs using financial statements in 5 distinct areas. The first one is financial statements, second is balance sheet, third is income statement, and the last one, the fourth, cash flow statement, and the last one is statement of change in equity. And the last one, how the FA works. The financial statements used in financial accounting is revenues, expenses, assets, liabilities, and equities. Second, what is define the cost accounting? Okay, cost accounting are the short I will pronounce as CA. It's used by a company's internal management team. It also identifies all variable and fixed costs associated with the production process. And the first process is measure and record these costs individually. Second, compare input costs to output results to aid in measuring financial performance. And the last one, the process is it's making the future business decisions. Okay, for your information, CA have 5 types of costs, which is the first one, fixed costs. Fixed costs don't vary depending on the level of production. This is because, as the example, I would like to explain. It's usually things like the mortgage or lease payment on a building or a piece of equipment that is depreciated at a fixed monthly rate. And the second is a variable cost. variable costs tied to a company's level of production. The example is a floral shop. You imagine as a floral shop ramping up its floral arrangement inventory for Valentine's Day will incur higher costs when it purchases an increased number of flowers from the local nursery or garden center. Third is operating costs. Okay, operating costs associated with the day-to-day operations of a business. It can be either the fixed or variable depending on the unique situation that the company goes through. And then the fourth is direct cost. It's specifically related to producing a product. The example that I'm gonna explain is if a coffee roaster spends 5 hours roasting coffee, the direct cost of the finished product include the labor hours of the roaster and the cost of the coffee beans. While and the last one is indirect cost. It's related actually with the direct cost. It cannot be directly linked to a product, but in the coffee roaster, as the example I gave before this, for the direct cost, the energy cost to heat the roaster would be indirect because it is inexact and difficult to trace to individual products. Next. Okay, this is a slide of financial accounting versus cost accounting, which is the differences between FA and CA. First, what is the purpose of FA and CA? FA is to keep complete record of the financial transactions, while the CA reducing and controlling costs. And the second one is information type. FA records the information which are in monetary terms, while the CA records the information which is material, labor, overhead that used in the production process. And the third one is when the FA and CA gonna report. Okay. FA, the financial statements are reported at the end of the accounting period, which is around 1 year. And while CA, the details provided are frequently prepared and reported to the management. And the last one of the differences between FA and CA is profit analysis. FA, as you can see in the slides, income, expenditure, and profit is analyzed together for a particular period of the whole entity, while the CA, the profit is analyzed for a particular product, job, batch, or process. And next, we will move to question 2. So for this question, the task is give 5 objectives of financial and cost accounting. So as you can see in the table, there is financial accounting and cost accounting. But first, I will go through the financial accounting, the FA first. Okay, the first one is compliance with sanctuary requirements. It's to ensure compliance with the local laws, as the example, the Taxation, Companies Act, and other statutory requirements. Second, safeguarding of interests of various stakeholders. This will provide suitable and relevant information to related and relevant. It provides suitable and relevant information related to the business operations, such as the user and users of accounting information. As the example is shareholders, prospective investors, financiers, and customers and creditors. Third, it helps in the measurement of profit and loss of business. This measures the profitability of the business for a particular period and discloses the net profit or loss. And the fourth of FA is presentation of historical records. This presentation focuses on the historical records and not on forecasting future, unlike other accounting such as cost accounting. And the last one for FA is Focus on external transaction of business. Based on the transactions, the accounts are prepared to quantify the business costs incurred as expenses and resultant profit or loss and earn. Okay, so we will move to cost accounting. See, first, it's facing the selling price. This is because the cost accounting allows managers to understand the cost of each product. Second, determining the profitable products. By determining the profitable products, it helps an organization to understand the profitable products. Third, controlling causes become easier. This can control the overall causes as per the outcomes of cost accounting. Fourth, handle bonus plans in an organization. This will keep the daily wages in pace and expect high-end production from them is by providing bonuses to them. And the last one for cost accounting helps in proper decision making. This decision making is a vital attribute on which the fate of a business organization depends. That's all for objectives of financial accounting and cost accounting. Next question. Question 3. We need to give 10 internal users and 10 external users of financial information together with reasons why they need to use the information. Okay. First, we will look to internal users. Management. The users of management first for budgeting, forecasting, analysis, and take important financial decisions. It's also to get the investment decisions, identification of warning and opportunity signals. Second, internal users is owners or partners, or actually it is business, the business owners. The users of business owners, they keeping an eye on the overall well-being of the business, such as employees, the cash flow, and then next, third, employees. Owners also observing their capital invested and evaluating its upward or downward move. Okay, this is important to monitor the cash flow in or cash flow out, so they will know the profit or loss of the company in the whole year. And then third, employees checking overall financial health of the company, especially which affects remuneration and job security. Fourth, employee unions. Employee unions, they ensure their demands to the employers, such as salary increments and other benefits, are reasonable compared with the company's financial ability. Fifth, finance manager or department. How they these internal users are important because they evaluate the ability of the organization or company to pay its business debts. Okay. Next, 6. Marketing department. They determine the policies and the price of the products to be marked. And then 7. Director. They ensure that they are appropriately motivated, develop, and carry out their responsibilities as the required standard that have given. And then 8. Officer. A key officer, the function and uses they in the company is as they are a key point of contact for other departments on financial and accounting matters. They also supporting the finance manager and executives with projects and tasks when required. 9. Internal departments. They compiling and analyzing financial information which give to the management in decision making. They are really important in the company. And then after the compelling analyze the financial information, the only one that can be viewed by individuals within the organization. And the last one for internal users is internal auditing. Uses of them in the company is focused on analyzing and examining accounting records to determine a final financial status. Okay, we move to the external users. First, investors. Uses of them in the company as the analyzing their present investment in the business or the overall financial health in case of a potential investor. Second, lenders, banks, or borrowers is evaluation of short-term and long-term financial stability of a business and assessment of the creditworthiness with the health of financial ratios. Third, regulatory and tax authorities. The ultimate intent is to protect business integrity and safeguard investors. Fourth, customers or consumers assessing the financial position of its suppliers, which is essential to maintain a stable source of supply. And fifth, public. Uses of them is they are eager to know the financial health of business and to get a fair idea of the firm's niche market, business environment, and economic atmosphere of the country. 6. Government. They ensure that a company's disclosure of accounting information in accordance with the regulations. 7. Auditors. They examine the financial statements and the underlying accounting record of businesses in order to form an audit opinion. And 8. Suppliers. Uses of them is they are inspecting the credibility of their customers by evaluating their repayment ability. And second, they're setting up a credit limit and payment terms with their customers. 9. Creditors. The uses of them in the company is to assess the ability to settle the amount owing due, and also over the short period or long term if the company is likely to be their permanent customers. And the last one for external users, agencies. They enable them to regulate the business activities, determine taxation policies, and basis regarding the national income and similar statistics. That's all for me. Hope all the viewers of my YouTube channel for these chapters gonna enjoy my presentation. Thank you.